Welcome to another US dollar update. Okay, so you may have seen my previous idea on the euro. So this is the US dollar version, basically giving you the larger picture of what's happening in the US dollar since 2008. Now, this is a big change to my analysis, and it took a lot of thinking and a lot of basically a lot of research to try and understand the overall picture of what is happening in basically everything. The US dollar has a lot of implications. Whatever happens to the US dollar has huge ramifications across the board. So I haven't been putting out much videos because I've just really been trying to make sure that I have everything dialed in properly in order to give you this video and also a whole bunch of videos which I have planned for the next week. Every day I'm going to be releasing another video, and one will build upon the previous one, right? So you've seen the euro one, you've seen that I'm bullish on the euro, and that means I'm bullish across the board. That means I'm bullish for the stock market. That means I'm bullish for cryptos. That means I'm bullish for commodities. So even precious metals, right? Now, this has been slowly coming into view. Now, it can if it makes sense in the waves, then I can definitely build a case for this sort of thing, right? Now, I have basically like a photographic memory when it comes to waves. So whenever I do my thinking and research, I always remember the waves and also how I've thought about these waves in the past when I come across them, right? And what they mean and how they've been confusing and how can they possibly be intertwined and meaningful at the same time. So it's not easy to come to this kind of conclusion, which is why it's probably one of the types of wave counts that I've thought about in the past, but I have dismissed them due to, I suppose, it just seems like sometimes it's out of the ordinary and it just doesn't fit the bill, right? But as time has gone on, because these are fractal patterns we're dealing with, we have to take everything into consideration. And one thing that I have to point out straight away on the chart is A waves. When A waves are the largest, the B, C, D, and E can be smaller and happen much quicker, right? So in the case of 2008 to 2015, that was an A wave, right? So where did the A wave end? The A wave ended right here, right? Now, if I try to look at this like it's part of, and I've done this before many times and I've incorrectly just went along with my analysis, which is the problem. AriasWave is an amazing tool. I've said this many times. It's up to the person who's reading it to actually make the correct assumption, because the theory itself I've put together over 6 years, but myself still practicing AriasWave. Okay. Now, there are certain rules that you shouldn't break, and I have broken a couple of them in the past. So that's why I'm taking longer to bring you this view. Okay. So first of all, if you want to know a bit of background on what AriasWave is, so every single correction has a pattern. It's a 3-3-5-3-5 pattern. So it's a zigzag, followed by a zigzag, followed by a 5-wave, followed by a zigzag, followed by a 5-wave. 3-3-5-3-5. Okay. So how do we get this here? So basically, A wave happened from 2008 to 2015. Then we had a small B wave, right here. Okay. Now, you have to understand that these are fractal patterns, so the whole pattern happens even within zigzags or wave 2s or wave 4s. So I do teach this stuff, but I'm just giving to you right here. I'm explaining myself and my thought process. Okay, so the 33535 happens in the B wave of a zigzag, and the first move, 5-wave move down is the A, and then the 33535 is the B, and then a 5-wave move is the C. Okay, in any move, right? It's been studied. I've studied it. I created this, so bear with me. I'm trying to explain it. Right, so then we had this move, a C wave. Now, previously I thought, okay, if this is a wave 3, we have a 33535, and I just said, yeah, that's fine. That's what it is. But unfortunately, now it's not appearing that way. So I've had to come up with this view. Now, the clues are in, the proof is in the pudding, right? So if you look at this D wave, you got to ask yourself one question. What is this pattern, right? So in order to confirm that this is actually true, you have to decide whether or not this D wave here is, or what I think is a D wave, is this a 5-wave move or a 3-wave move? So I came to the conclusion recently that this is a zigzag. So therefore, this cannot be a correction of a wave 4. This is it's part of the larger correction. Okay, so we have the 335 C wave there, very strange looking C, but it's not a zigzag. And then you have your D, and then this is the E. So basically from 2016 in April to 2016 in December, that was an E wave. Okay, so it is a 5-wave move, but it's not a wave 5 of the larger pattern, right? So this gives away all the clues. This is basically the one that gives it all away in terms of what is happening next here. Now, it's the same scenario. Once again, we have a wave 1 down, and we have an A wave, right? So the first move is an A wave, and then we have our B, C, D. So that means now we're going for the E wave. Okay, so this is very interesting because it has a lot of meaning behind it, right? Now, I don't know how long I'm going to get in, if I'm going to be able to explain this in this video, but I want to give you some pointers here, right? Now, I don't know if I'm going to get a chance to, how I'm going to do this, right? Basically, when it comes to Bitcoin, since that same period of time, 2009, you know, because Bitcoin was basically launched in around 2009 after the US dollar had already made its first move up. Now, think about that for a second, right? So during this corrective period, Bitcoin rallied, right? And then during the impulsive wave that came, because there's only 2 impulsive waves in a zigzag, right? It's the A and the C. The B ended here. So if you have a look at a Bitcoin chart, you will see that during the impulsive portion, Bitcoin actually corrected, right? So, and I'll explain to you over the next several videos how this all ties together. I just don't have enough time on one video to do that, right? And then basically, whenever it came to the point where there was a correction in the US dollar, Bitcoin rallied. So basically in 2017, when Bitcoin went parabolic, basically, right, the US dollar was in an impulsive move to the downside, right? So that was actually wave 1. Okay, that was wave 1. Now, I do believe that wave 2 ended here because of what I've just said, right? So that means since 2016, the US dollar has been preparing to collapse, basically, right? So, but nothing happens in a straight line, and this is the whole reason why I created AriasWave was to be able to understand these type of things. Now, this has led me to investigate cryptos and become extremely bullish on crypto. So have I wasted time? I don't think so, because now I'm really starting to invest into certain cryptos. Won't say which ones, you may already know, based on basically the ideas that I put out. So whatever. Eventually, I'm going to cover a lot more, but I need to establish the foundation, the groundwork right here. So as you can see, once again, wave A was the largest wave, same as back here, right? So these two are A waves, okay? That's an A wave as well, okay? Now, when A waves are the largest, the rest of the waves are basically smaller and happen quicker. They can expand or they can not, right? So basically, when it came to wave two, this wave two here, that ended in 2016, the B, C, D, E, there was still a lot of strength in the market. So those patterns ended up towards the top side, which is what made this pattern difficult to understand in the first place. But now that we're in the beginning of wave 3 down, which is going to be an amazing move to the downside, this is what's going to give cryptos basically their glory that's coming. It's in progress right now, right? It's getting ready to launch, but you need to be patient, and I'll explain that to you over the next several videos. But this is it. This is the reason, right? So when it comes to wave E, this wave E can definitely move from where it is now anywhere up to, right? And I'll tell you where. It cannot go above the start of wave 1. That would invalidate the entire analysis, basically, right? So basically, we've got a lot of room to move in here. Now, if you're an Eliotician, a lot of people will say this is ABC, but ABC is not the only thing that happens in a correction. This is where AriasWave is different than AriasWave, right? And also, there's a lot of things about AriasWave that are wrong, like combinations. That's all BS. That does not exist. It's just that the corrections are the B wave portions of zigzags are expanding, or you have ending weak wave C's and E's, which can basically form what they call ending diagonals, but I call them weak waves, because a weak wave C can't be an ending diagonal because it's wave C, right? So I call them weak 5-wave moves, right? So in this particular case, what we're seeing right now happening is an E wave, right? So this has a potential to cause a bit of a problem here. Now, as I mentioned, I'm going to explain what this could potentially mean for other markets, such as the Dow Jones and the cryptos. But I do have to mention one thing. If E wave goes up higher than what it is now, you better believe that this can be impacting on Bitcoin's price, right? And I'll tell you why when I switch over right now quickly to the Bitcoin chart, because I'll keep talking about it, and here it is. Now, in this particular view, I'm taking the view in this particular series of ideas that wave 3 ended in 2013, wave 4 ended in 2015, and wave 5 ended in 2017. Right? Now, whilst other altcoins have been correcting during this whole time since 2017, Bitcoin has also been correcting during this time, except because of the really expanded nature of the waves, it's just mainly caused it to be, very speculative and very bubbly, right? So I've had this view for a while, and in this particular series of videos, I'm going to be presenting this particular view, and There's more. Trust me, there's more. I'm trying to tie everything together. Now, in general, I am bullish on cryptos. Yes, I am. But I have also been hearing a lot about this thing called the level playing field. Okay? The level playing field means, in my opinion, that everything will be brought down to earth during this period of time, including Bitcoin, right? Now, you could just imagine what happens if Bitcoin corrects, like I've been saying for a long time now, in wave C, and the wave C happens to go back to the previous fourth wave, because that's what generally happens in corrections, right? Previous fourth wave, right? Which is down here at around $170, $160, right? Somewhere around there. Now, if you could imagine what happens if price goes down to that level, you would have a level playing field, right? That would mean that people would now have to start using their brain instead of just their, lizard brain, their human brain, right? And start doing some due diligence as to which crypto is actually good and which crypto do they actually think has real utility and use case, right? So this is a very interesting thing. Now, am I saying that the C wave is the only wave that's going to take it down there? Not necessarily, right? We could see the C wave go midway. We could see the D wave go back up, and then we could see the E wave complete the process, right? Look, I'm just giving you what I see as the waves. And the reason why I'm taking this view now is because I look back down here and I can see something interesting happening in 2015. I saw a B wave, C, D, E. So this is a complete correction here, right? So the previous other ideas that I had, this invalidates them, basically, okay? So this is very interesting because that means that a lot of other cryptos which appeared around 2016 or by 2017, whatever, they are in like a wave one and correcting. So either way, it doesn't really matter, because once wave one finished for Bitcoin here, for example, right, you're still having the same kind of correction that any coin would have from that point onwards, right? So this is why I'm going to start really getting deep on the waves and how I see them. I have been spending a lot of time really bringing it all together in a way that will make sense, and I will go through these waves in detail in another video to really sort of bring this point home on why I think these waves are giving me this indication, all right? Because it's very easy for me to say that, but I actually want to show you, if you look closer, how that actually is, how it all makes sense. So I'll make a separate video and I'll call it something like Bitcoin, let's go through the waves, okay? So, and I'll use a bit of other information like indicators as well, because they also provide valuable knowledge, valuable data or information, right? So I can't make anything out of this wave here since 2017 for Bitcoin. That's an A zigzag, that's a B zigzag, right? We have to have CDE before the impulsive move continues to the upside, which, look, I'm telling you right now, if you're looking at, for example, XRP, XLM, or a lot of other different cryptos, right, they're all within a correction since 2017. Okay, the whole market is, right? So don't think that we're just going to go up in a straight line. This is the point I've been trying to make in my Ripple videos. It's just wishful thinking. So we need to get away from that wishful thinking, because it's just hype, right? I want to actually get us in on this massive crypto run that's coming. So I suggest you really pay attention to what I'm going to say, because it's really going to help you understand what the waves are doing. Hopefully you found this video interesting and informative.